this morning. So what's going on? Let's go across to Vandana Hari of Vanda Insights for some perspective. Vandana, thank you for joining in. Good morning to you. So it was a little perplexing because the US data that came out yesterday, the EIA data, that showed a big drawdown in inventories. Inventories fell a lot more than anticipated. And yet the market was declining on some other worries. I don't know if it was recession or banks or what it was. But what's your sense of the oil market right now and the volatility that we saw overnight?
Good morning. Excellent question, especially with regard to the quite a bullish EIA inventory data and even US demand data. So just to put everything in context, I would say here's the main thing to bear in mind when looking at the oil markets for the short term. So you have the financial market sentiment, and then you have oil supply demand fundamentals, right? Right now, oil prices are being driven entirely by the former. So everything that is either improving or worsening risk appetite in the financial markets is exactly what is moving crude up and down. And what we have seen this week is essentially reminiscent of last month's the banking crisis in the US. So only the actors have changed. So now all the attention is on this First Republic Bank, and that is in turn that has been triggering fears of could this be a wider contagion? Could this mean that US recession is around the corner? And as a result, crude is being sold off. It's almost entirely decoupled from fundamentals. By and large, global fundamentals, we could talk about EIA and US separately, but by and large, on global fundamentals are quite balanced. That's another reason fundamentals have taken a backseat, not just now, but pretty much since the start of the year.
Okay, so given that the market's moving on sentiment, hard to put a band on sentiment, but if I were still to sort of ask you to try and do that, what's the immediate range that you see ahead? Because these things will continue. I mean, what's happening with banks, we don't know. But if let's look at Fed, and the anticipation is 25 basis points and then they're done. Looking at macros and slightly deeper fundamentals, what's a band that you expect oil to be in?
Yeah, so we should definitely talk a little bit about that. Just going back very quickly to the EIA US data. So indeed, it was quite bullish. A drawdown of inventories across the crude and products in the US. Even demand, surprisingly, is picking up. So gasoline demand is running almost 4 to 5% above a year ago. Same for distillates as well, which is a bit surprising given that broadly the distillate demand trend in the US is a downward slope. But again, as I said, what's happening is in the financial markets, you have a couple of factors that remain in place. So one is, of course, the banking crisis, and what more, the fears of what more the fault lines are there yet to be discovered. And then we have the Fed meeting coming up next week, and speculation over whether the Fed will continue on its monetary tightening path has also kept the markets on the toes. So next week's Fed meeting is expected to produce a 25 basis point hike, which is like mostly baked into the market. But right now, the bigger worry is what does the Fed do after that? And then we have the ECB meeting in Europe next week as well, which is also expected to yield another rate hike. So overall, when oil market players are contemplating the environment in the financial markets, it's not looking very good. In terms of the central banks continuing to tighten monetary policy, inflation remaining stubborn, and basically consumers are just losing the confidence to spend. And we are seeing not much support for oil from China as well. So we had quite a mixed set of data for Q1 and March from China, both in terms of macroeconomic data as well as oil demand data. So it's painting a picture of slow, uneven recovery in China. So, a lot of the bullish sentiment that had developed in the oil markets because of the China reopening, that has subsided as well. So that support is gone, just leaving crude prices vulnerable to being battered by a drop in risk appetite.
So Vandana, can you leave us with a range, some sort of an estimated band?
So just looking out at this year, I maintain my sort of expectations of prices somewhere ranging around, mid 70s to $80 a barrel. That would be a good $20 to $25 below the average that we saw for last year. Now, again, last year was a very supply-driven, supply fear-driven environment. This year is entirely about demand.
All right. Thanks very much, Vandana. Appreciate you joining in, and good getting that perspective from you.